So TCS reported yesterday for its fourth quarter. Results are largely in line. I'm giving it a thumbs up because even though there was a slight miss on EBIT and on PAT, this was led by tactical interventions. So promotions, even what they spent on salaries, etc. That is the reason. Management is expecting a better FY26. Their sharp come down is also because of BSNL, right? The BSNL flows will start closing out in Q1 of next year, so that's what's being seen as well. In terms of the actual numbers, net profit was down 1.3% at 1224. Revenue grew 0.8%, so a little tepid there. 64,479 crores was the figure. EBIT was down 0.4%. So this is, if I was to mark the one disappointing metric, it was probably this. At 15,601 crores was the number. Margins at 24.2 versus 24.5. This is in constant currency, Q or consolidated Q on Q. Remember, they have had an opportunity or a positive because of the currency moves as well as far as TCS is concerned. But despite that, it seems like a pretty soft quarter for TCS. I want to go to the rest of the stocks if I can, and Tata Steel is the next on my list as well that I'm seeing. Tata Steel also a thumbs up today, and remember, commodities were beaten down because of what's happening. Now, while I'm talking about Tata Steel on a particular news point, watch out for what happens with commodities. It's a bit of a murky area there. One would consider that a pause means it's positive, but there's still 145% duty on China. Anything which bothers China, bad for commodities. So we'll have to wait and see how this plays out. But specifically, let's just talk about why Tata Steel is the stock that we want to watch today. They have come out and talked about what happens in their Netherlands business, and they have given quite a few details on their Netherlands business as well, which is why seen as a positive. They're embarking on significant cost restructuring and aim to cut FY26 controllable costs by 15% versus FY25, which is why Tata Steel is on focus. The brokerages are seeing an estimate on this as FY27 EBITDA per ton estimate by Investec is $100. BNK Securities says $80. Right now, they have an EBITDA loss, which is why Tata Steel in focus. I'm going to talk about Sun Pharma as well. Sun Pharma is the third stock on my radar, and that's a positive because of a favorable court ruling from a US court lifting the ban on Sun Pharma selling a drug called Lexelvi. This is a hair loss drug, and specifically hair loss caused by immunocompromised compromising diseases. So the ruling paves the way for their launch in the US. The lawsuit is ongoing, but selling Lexelvi is allowed now. Why this matters? They've appealed against a previous court decision that delayed Lexelvi's US launch. The company will disclose its launch plans for Lexelvi in due course, and it will contribute $90 million in FY26 and $125 million in FY27 sales. Once again, reflecting what Hiral was also saying, all of those sectors beaten down by tariff fears could see a bump up, and these are the specific ones on that list. Yeah,
100%. And in fact, metal is losing out more than any other pack. So particularly one of those stocks that in your list, I would watch for Tata Steel. Of course, TCS takes the cake today, and we'll be talking about that in more detail. But my three stocks, we've got Adani Energy Solutions, and this is a thumbs up. The company's expanded its transmission network by 140 circuit kilometers in the March quarter, and that's a solid run rate. In fact, the March quarter total transmission network, or at the end of the March quarter, it now stands at 26,696 circuit kilometers. The company's under construction order book rose to 59,936 crore rupees from about 17,000 crore at the start of the year. So that as well is a big jump in the under construction orders. Watch this in trade today. Deepak Nitrite, for various reasons, but there was also an update. The company will set up a manufacturing complex for 3,500 crore rupees to produce phenol, acetone and other chemicals in Gujarat. Now, bear in mind that the entire chemicals pack is going to be in focus. Of course, the details are going to have to be studied very closely, but at least on the surface, one could argue that in the context of almost all countries getting a break from US tariffs and China not getting a break, the whole conversation about China plus one comes back into play, and this is something that could influence chemicals as well. So keep this as well as others in the chemical pack on your radar. And the final stock, or stocks I should say, are from the tire space. And CLSA has a note out where they're talking about quite considerable tailwinds that will come into play for these companies. They have initiated a high conviction rating on Apollo tires, as well as an outperform with a target price of 566. On CEAT, they have initiated an outperform with a target price of 3,493. And on MRF as well, they have initiated an outperform with a target price of 12,000, apologies, that 1,28,599. Remember a time when MRF was about 50,000 rupees. It's moved up considerably from that point. But what are they saying? They are moving up the profitability curve, these tire makers. And of course, we've been talking about the fall in crude oil prices being positive for them. Drivers of margin revival are in place. The unit level profitability and market mix improvement is taking place, and that is structural. The valuation sensitivity is far more linked to the margin and free cash flow versus revenue growth at this juncture. And the capex in the space is now focusing more on PCR versus TNB tires. Now, domestic demand driven space is also positive, and in fact the commodity correction is definitely favorable in the current context, and that aids to the valuation picture at this point.
I mean, these are interesting names, and Alex, I think from yours I always wanted to look at a Deepak Nitrite, because I'll just add to it, capacity is going to double, and this is going to be a huge positive for a Deepak Nitrite, I think, and that's going to be one of the stocks, probably could be a stock of the day, as well. So that's an interesting one. But on my list, I'll take the three quick ones, because we have Moshe as well, who's standing by to discuss TCS. But quickly, Anand Rathi, that will be in focus. You know, it's very confusing with regards to Anand Rathi as to whether to give it a thumbs up or thumbs down, but a consensus view is a thumbs down on the back of no growth. The PAT is below estimates because this is the other income which has boosted the profit number this time around. In fact, the margin number in terms of sequentially is also below what the street was estimating, and it is indicating some bit of a disappointment on that front. In fact, the stock was down around 12% in the last 6 months, and it started to see some bit of a recovery in the last 1 month. So watch out for Anand Rathi in trade. Secondly, you have Manappuram and Muthoot Finance that will be in focus. Now, this is on the back of the impact on the draft guidelines for, gold financiers. Both of these stocks did take a beating. Now, what has happened is that the regulatory overhang is gone. There could be a marginal growth impact. The OPEX would possibly be higher from here on. And this also gives you a level playing field between the NBFCs as well as the banks, because banks follow most of the regulations and they are better placed. Now, clearly, the overall picture is better than feared as per what the analysts are indicating. So there is a possibility that both these counters could see some bit of a bounce back in terms of trade today, because it's a pretty mixed view coming in from brokerages. And one point that we need to note is that in terms of the 75% guideline, in terms of the LTV that these companies have to maintain, your Manappuram and Muthoot are in that range of around 60 to 65%. So they are way below. The only risk factor that comes in over here is in terms of the gold price movement. In case there is a major downtick in terms of gold prices, that could come in as a major risk factor for both these counters. So a thumbs up on Manappuram and as well as Muthoot in terms of today's session. And very lastly, I have a Olectra Green. A 424 crore order is what they've got, and this is for 297 electric buses. The execution period is the next 11 months, so FY26 is where they will see the revenues flowing in. Clearly, the electric bus makes up almost around 85 to 90% of their revenues, and they're continuing the expansion because their order book stands at currently around 8,100 odd number, and they're planning to increase the turnover by almost 100% every 2 years. The annual production capacity has now reached 5,000, and they're planning an expansion to come to around 10,000 units. So again, a thumbs up coming in with regards to where Olectra Green goes. So these are the names that we should be watching out for in trade today.